Singapore is studying options to expand its system of wealth taxes while staying competitive. Such taxes include stamp duties on residential properties, property taxes, and additional registration fees on motor vehicles. Finance Minister Lawrence Wong further laid out the nation's fiscal strategies at the 35th Singapore Economic Roundtable. He also called for international cooperation to tackle tax issues. Chloe Chu reports.
Climate change and rising carbon emissions, an aging population and income inequality. These are some broad challenges that Singapore faces.
They are interlinked, and we will need to tackle all of them comprehensively. For example, an aging population can exacerbate inequality, while inequality can make the lower income more susceptible to the effects of climate change.
To overcome these, Finance Minister Lawrence Wong says the country must re-examine its fiscal strategies. Programs like Skills Future, aimed at training workers, or any other future investments, must be funded efficiently. The country's revenue base needs to be enhanced too, to cope with rising spending needs. And all these should be done while ensuring the tax system remains fair to everyone.
We give this assurance to all Singaporeans. Your life and the life of your children will become progressively better. Nobody and no group will stagnate or feel excluded from the benefits of growth.
Another fundamental challenge faced by global governments is an increasingly mobile tax base that comes with more movement of capital and talent between countries. Mr. Wong says international cooperation is the way forward.
In the past, MOF's work was more domestically oriented. These days, we are much more actively involved in international forums like the G20 and OECD. And it is important for us to have a seat at the table and to do our part to shape the evolving rules on international taxation.
He adds that such discussions are taking place, and also on carbon taxes and ensuring uniformity in pricing. Mr. Wong says Singapore's revised carbon tax rate for 2024 will be announced during next year's budget.
Our carbon price today is too low. This is why we are reviewing the level and trajectory of our carbon tax. We will ensure that it reflects the cost of carbon and influences investment decisions effectively.
It'll also give businesses an idea of what to expect up to 2030, so they can adjust their plans accordingly.
The Finance Minister also said that the government will stick to keeping a balanced budget at the end of its term, even with deficits in the current and previous financial years. Mr. Wong was responding to questions from the public at a dialogue session. Now, he adds that the policy is enshrined in the Constitution to make sure that the country doesn't lose discipline and break the bank.
The balanced budget rule does not preclude us in government from undertaking counter-cyclical spending or crisis spending in an emergency. And in such an emergency scenario, we have the ability to draw on the fiscal firepower of our reserves, as we have done, of course, subject to the President's agreement. So I think it's a sound system that that instills a culture of fiscal responsibility and stewardship, and still enables us to spend when the need arises.
People also asked about the goods and services tax hike and when it will happen. It's set to go up from 7 to 9% sometime between 2022 and 2025. Mr. Wong says that this depends on the economic outlook and inflation.
When GST is introduced, it will come along with the assurance package, which will effectively delay the GST increase by about 5 years for majority of Singaporeans. And for the lower income Singaporeans, it will delay the GST increase effectively by 10 years.
Mr. Wong adds that Singapore will do more to compete on so-called non-tax factors to attract MNCs. Now, these include quality of labour, rule of law and intellectual property rights. This comes as tax incentives may lose their allure if the OECD's 2.0 plan becomes the new global norm. Now, global firms might have to pay more taxes if their profits come from countries with lower tax rates.
So long as this is done on a level playing field, all countries adopt this, fine, we will go along with that approach. Doing so may give us some additional revenue from our corporate, through changes in our corporate tax system. And if we do get additional revenue from that, we will plow it back to upgrading or improving the capabilities of our workers, of our economy, so that we can remain competitive in this new BEPS 2.0 world.